You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Friday, July 6th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. First thing to know is China accuses U.S. of beginning the largest trade war ever. U.S. tariffs on $34 billion worth of Chinese goods went into effect at 12:01 a.m. Eastern Time on Friday, and China quickly retaliated, according to state media reports. U.S. President Donald Trump indicated late Thursday that another $16 billion are expected to go into effect in 2 weeks, with an additional $200 billion currently in abeyance, and that he gave instructions to identify a further $300 billion of targets. China's Customs Tariffs Commission of the State Council previously announced that it would immediately retaliate with tariffs for 545 items worth about $34 billion, including agricultural products, vehicles, and aquatic products, according to China Daily. According to the Chinese news agency Xinhua, the retaliatory tariffs for the amount had already gone into effect, although the exact details were not specified. Second thing to know today is the jobs report is on tap. Coming a day after the minutes from the last meeting of the Federal Reserve showed that policymakers generally supported further increases in interest rates as the pace of U.S. economic growth continued above trend, market participants will focus on Friday's publication of the monthly employment report for June. The U.S. Labor Department will release the non-farm payrolls report for June at 8:30 a.m. Eastern Time, out already, and will be watched more for what it says about wages than hiring. The consensus forecast is that data will show jobs growth of 200,000 after adding 223,000 positions in May, while the employment rate is seen at 3.8% in June, matching the near 18-year low hit a month earlier. However, most of the focus will likely be on average hourly earnings figures, which are expected to rise 0.3%, the same gain reported a month earlier. Third thing to know is U.S. futures show cautious trade amid tariff news. U.S. futures pointed to a slightly lower open on Friday as investors digested trade developments and waited for the latest reading on the American labor market. Fourth thing to know, the pound is on watch as the UK prepares Brexit proposal. The pound was little changed against the dollar on Friday as UK Prime Minister Theresa May gathered her cabinet to agree on a government white paper, which will lay out the British proposal for its relationship with the European Union when it leaves the bloc next March. May is reportedly seeking to maintain close ties with the EU in the interest of business, but is facing staunch Brexiteers who insist on regaining British sovereignty. The gathering began at 5 a.m. Eastern and is expected to last all day, with plans to publish a final proposal on Monday. Fifth thing to note today is oil prices head for a weekly loss ahead of U.S. production data. Oil prices traded lower on Friday, extending weekly losses as investors watched trade developments and look forward to weekly data on U.S. drilling activity. U.S. crude oil futures lost 0.19% to $72.80 a barrel at 7:04 a.m. Eastern, while Brent oil fell 0.68% to $76.86. As part of China's retaliatory response to the U.S., Beijing has threatened a 25% tariff on U.S. crude imports. That could make American crude shipments to China, calculated to be about 400,000 barrels a day, uncompetitive. Our second story today is from Investing.com. Metal markets are preparing for a new world disorder. Donald Trump's attempts to rebalance global trade have already sent the metals world into a tizzy as countries responded to U.S. tariffs and sanctions. The disarray is set to increase. Steel prices and aluminum premiums are shooting up in the U.S. thanks to tariffs threatening to wreak havoc on manufacturers. Everywhere else, metal prices are on a roller coaster ride, with copper and zinc retreating on fears of slowing demand. If investors have stayed sanguine so far, metal investors are voting with their feet. This is a very strangely worded and written article. The next steps may be more dramatic as the U.S. and China engage in trade war brinkmanship. Where did they come up with this stuff? That may involve hundreds of billions in tariffs on everything from cars to soybeans. Our third story today is from Reuters.com. Ford slides deeper into China rut after worst first half vehicle sales ever. Ford Motors' China slump intensified, with vehicle sales tumbling 38% in June and the automaker recording its worst ever first half as buyers shunned its aging models that are awaiting overhauls and flocked to rivals. The U.S. automaker announced on Friday it sold 62,057 vehicles in China in June, taking its sales for the first half of the year to 400,443, down 25% compared to the year-ago period. According to consultancy LMC Automotive, it was Ford's biggest first-half percentage decline since starting operations in China in 2001. Ford, which undertook a big expansion in China earlier this decade, is paying the price for a lack of new models in its lineup. Last year, its sales fell 6%, even as the overall vehicle sales in China rose 3%. And that, ladies and gentlemen, is news you can use for today, July 6th, 2018. Your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.